Hi everyone, this is Sunny this side. I will be sharing the understanding of what valuation is all about, and we'll try and understand why valuation matters. What are the various types of valuation which today exist in the market? Then what are the various methodologies by which we calculate the valuation? How the whole process of valuation unfolds? Let's try and understand that, right? Now, if we understand what valuation is, mathematically, it looks like it's more of a science, but there's always some kind of an art also involved, while we are calculating the valuations. So firstly, let's understand what valuation is. Valuation is nothing but it's the analytical and mathematical process by which we are able to determine the current or the projected future values of assets. These assets could be your company. These assets could be, your physical assets, right? Anything which is going to generate any kind of a future cash flows, right? We try and understand, how the narrative stands out going forward, how it is able to, derive a lot of value, when you're using the particular asset or when you're particularly using your company, right? You've built in. We understand, a perspective, the competitive advantages, considering all the macroeconomic environmental factors, and we try and quantify them into the financial structures. That's what we define as valuation. Now, why this valuation holds importance? Now, considering certain important business and finance case scenarios, for example, mergers and acquisitions, capital fundraising, which most of the companies do. There are a lot of strategies involved also, like such as capital budgeting. Now, all these scenarios actually require a lot of understanding about the valuation. Now, in case someone is planning to acquire a company, you need to understand, right? What could be the exact price for buying that particular asset? And when we do that, we are trying to understand what are the future cash benefits we are going to generate out of the particular transaction, right? And certain where we also try and understand and quantify the patents, the goodwill also into consideration, because patents and goodwill will any which ways generate future cash flows coming into account, right? So that is where, again, for merger and acquisition deal, valuation holds a lot of importance. Uh, Fundraising, as it is, we know that today a lot of companies, both on the listed and the unlisted format, are raising funds from the investors. So it becomes very important for all of us to understand, what value we should be raising the funds, right? As I said, when we are planning for new initiatives, new projects into our company, there's a lot of capital budgeting happening, at the end, at the back end. That is particularly talking about a lot of strategies getting involved. That is where we need to understand how valuation holds a lot of importance in understanding what kind of capital budgeting the company should plan. Right now, when we talk about valuation, we are trying to understand what is the whole process or how to calculate the valuation. First, we try and understand what are the various macroeconomic factors and the industrial factors which are involved in understanding the valuation for the asset or for the company. We also look at the historical financials, because somewhere, historical financials help us understand how the clients, in the market are reacting to the asset, the buyers of the asset, or I would say the buyers of the products and services of a company, how they are reacting, to the products or services offered by the asset or by the company, right? Basis that, and obviously basis, what are the current orders in hand, or what is the current market trending into. We also understand how we are able to project the future cash flows going forward, right? And then obviously those future cash flows are always discounted to understand what are the risks involved when we are projecting the future cash flows. Because whatever you project, somewhere you'll have to take certain environmental, economic factors of risk into consideration while projecting the cash flows. I mean, they cannot be 100% correct, right? Somewhere you'll have to understand that certain changes can happen at any given point in time, so you discount those cash flows, and then probably your real value of the asset or the company comes into picture. That is how we try and understand what valuation is.